All right, so here's our S&P. If we relied on this super trend right here, is it? Yeah, that's the one. Yeah, I'll take that one off. If we rely on this one, just historically, now it's only been 1 week, right? So if there's a huge rebound, the sell would disappear. So there's no reason to rush in. And I don't know how we catch the bottom, right? It's just too hard. It's too risky. So if we look at this super trend on the weekly, it's printed a sell. In the past, one, two, three, four. That's a month of sell off, but that was our original COVID sell off. Excuse me. And so we had a nice huge dump, right? 3,300 down to 2,200. Ouch. That's a 30% cut clear across the board. That was terrible. In 2019, 18, we printed a sell and we went into a mini bear market here, October, November, December, and it bounced back off the 200 day. So let's bring it over to the daily and check it out. And daily is going to give you a lot more buys and sells because on a short term, in the short term, we're more volatile, right? It's harder to get a conviction of whether or not to sell or buy, right? So these are dangerous. I mean, if sell, buy, sell, buy. I mean, your head's spinning if you're following this every day, right? And you might not make much money in there. So the weekly is more reliable because it's much more clean, right? I mean, imagine if you bought, sold. So just to clarify that, let's go back to the daily. So yeah, I mean the daily got down to the 200-day moving average, um, and it's got a hold, I suppose. Let's go back to the COVID dump. I mean, the COVID dump was irrational and fear-based. I mean, look, we pulled up a little bit after going under the 200-day, and then just lost another 800 points. I mean, even there's candles in here where you think, oh wow, the market was going to turn around, but it didn't, right? A lot of fear though, a lot of fear. Now I think what's happening here is, I mean, there's a lot of fear out there. It seems like the economy is not getting better. Um, and remember, they're not printing checks anymore. So, people are going to break soon. I don't know. Anyways, let's look at Bitcoin. Um, so I put another line in here the other day, and I drew one back to, this is the new line I put in, this one here. And I just connected that with oh, I'm sorry, the new line is this one. Yeah, I'm right. What am I talking about? Anyways, I just connected with the top of 20K back in 2017 because we kind of did bounce there. So I originally thought we'd end up in here somewhere. So let's wait and see. So that's anywhere between, 30 and 33. I mean, we're close to there, right? But once again, it's all about what the S&P does. There's no way it's gonna. I mean, it just follows the S&P so much. So, excuse me. And this is a number to watch. I really think S&P 500 stocks above the 200-day moving average. So, um, right now we're at 50, 49.7. So if we look at over long term, I mean, even the COVID dump, which is in isolation, it's unique, right? Because it was no one knew what was going to happen, right? So it's a lot more fear. This dump, I think, could be just related to the fact that the economy is really not doing that well. So if a little fart, did anybody hear that? Let's go to the weekly on this. Get more. So it's safe to say that when 80% of the market, at the least, when 80% of the market, because you have top, 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 80% of the market is over the 200-day moving average, it needs to correct. It's too much, right? And hence we talked about that with Netflix, right? Netflix I mean, you could say what you want about the company, and I don't even know the specifics of the company, to be honest with you. But it's a correction in price that was, you know, probably needed, right? So now let's see the bottoms. So the extreme bottoms, I would say, is anytime we're below, 20%, upwards of 30%, right? So 30% of the S&P 500 is below the 200-day moving average. Um, yeah. So we do have some alts catching up today. Um, Usually coins that were extremely bullish bounce the best. So if you take, for example, this is Phantom. If you take for example Phantom, we got a really nice bounce here. I mean, but good luck if you caught it, right? I mean, how do you? It's risky, right? And then who's to say, right, that it doesn't just bounce right back down? And so, um, yeah, that was a big mover, 11% today. That's a lot. Then you got other ones, Ether, right? Not as much. I mean, it's a bigger dinosaur, so it's harder to move. But yeah, nonetheless, it is a nice little bounce, but who knows how far it goes. So it would be remember, in a bear market, in a bear market, runs get smashed, right? So it makes a run, hits that, gets, hammer back down, makes a run, hammer back down, makes a run, hammer back down. So maybe it does run here, and then it could easily just keep going down. I do not know. Let's go back to Bitcoin. Actually, let's check out the S&P a little more. This is called the RSI here. This is Bitcoin. This is oversold territory. So that's a lot of dumping going on. Last time we were there, I mean, we were completely oversold here. And had you bought, had you bought that wick down, you bought in completely oversold area, which ended up being, the bottom. But when it jumped from back here all the way back down, you're scratching your head thinking about where's the nearest window. So let's see. Maybe we get several touches on this, right? Maybe we get a couple bounces here. So you're in for a little roller coaster. Yeah, so last time we were over that oversold. And other times, this was deep in the bear market, accumulation, and then we went to the moon. But we had we had a lot of oversold territory here. And that's just because people, are scared. I mean, yeah, I don't trust these things, but I mean, it does say it's a sell. So, can you believe that? Oh, look at that. Yeah, 3 months it's down 43%. Wow. So, MACD, I don't know. Nothing going on there. It bent back down though, which is not a good sign. Let's do the same on the S&P. Let's see. So on the S&P, we're down into some completely oversold territory down here. Last time we were there was in, the beginning of the COVID dump, and it's down here, right? I mean, when we're this oversold, we do have some nice rallies. I mean, 2,300 to 2,900. That's not bad. It's hard to tell. If we check it out on the weekly, you see that we're not even really oversold on the weekly yet. We were in much worse territory before. But, this dump is only 3 weeks old, so let's give it some time. In my mind, I keep thinking it's gonna bounce here. Um, and notice there's no wick. Something to point out. There's no wick on this candle. If there was a wick, that means that there was huge fear, but it got bought back up. This literally dumped and just stayed there. This is where Friday ended, right there. If the market was open longer, right, you can imagine maybe it keeps going. I don't know. But that's a very solid um solid candle. I mean, you see here we had a nasty one, and then we get huge buybacks. And this is a good one to point out. See this candle? Completely overtakes this candle. So that's a sign of a turnaround. And then from here on out, we're living in America. Da-da-da-da. So, I don't know. I would hate to see this break, and then it goes all the way to 38, right? So we're at 44, about 44. If we go to 38, shoo, wow. Possible though. I mean, like I said, 2018 into December, turned it around on Christmas Eve. So let's see. what else are we looking at here? Let's look at the DXY. DXY is looking strong. This is a comparison I did the other day. Yeah, we bounced here off the 20-week moving average. Let's clean this up here. So we bounced off the 20-week, which is the yellow line. Pretty good sign. The 20 is going to cross over the 200. These two are pointing up. Let's see what it's traditionally done on the 200. Yeah, I found nice support here on the 200 back in 2018. And nice W here. Reversal sign. Double bottom right here. I mean, yeah, this was, I guess, I suppose you could say, you see this big long candle, June of 2021. I mean, I suppose traders confirm this was a double bottom, right? Because we had 1, 2, 3 weeks of it turning around compared to the other low, the other bottom. And we've rode the 20-week. We talked about this last video. We rode the 20-week, which tends to be a bullish scenario, riding the 20-week, right? We rode the 20-week here. Yeah. Right, bouncing. It's hard to say it won't keep going, but it's something to watch. I mean, it's been a decent rounded top up here. I mean, let's see. And this is, yeah, we'll see. I don't know. We have a MACD crossover, which should have printed by now. So let's see if we bring up a super trend strategy. It is not showing us a MACD crossover yet. So the +2 gives it, after it happens, I believe it takes 2 candles until it prints the entry. Let's go to the daily though. That was a nice little fart. On the 99, nice bounce on the 99. There's a short entry. Interesting. I don't see how that's a short. I'm not. I don't understand this. Why would it print a short there? Wouldn't it print a long? Anyways, on the daily, the MACD is winding up to cross over, it looks like. So this blue line is gonna cross over the red line, it looks like. I remember pink is some buying, red is dumping. So we're gonna get our first green bar in the histogram with a MACD crossover. And if there's real fear in the market and we're in a recession, people pull out of dollars, right? Or excuse me, people pull out of their own currency and go back into the dollar, right? So if more of that goes on this week, then the DXY will be up and the market will suffer, in my opinion. Let's check out gold. Gold's pretty boring. 1840 to 1740 is our little range here for the past 6 months, 9 months. I can't do math apparently. June, what's that? What's today? almost February. Yeah, 7, 8 months. So, yeah, I don't know. Nothing exciting. No. Well, I suppose. I suppose we're winding up here inside this triangle. So, price staying here. I don't know. This is Bitcoin dominance. Bitcoin dominance is the market cap of Bitcoin only uh, over the what am I talking about? Bitcoin dominance is how much of the market cap of crypto is Bitcoin's value, Bitcoin's market cap. So of the entire crypto market, 41% is Bitcoin. Um, Now, what does that mean? Well, let's pop it out to the weekly, get a bigger idea. This is when crypto first sort of took off. This is when Ether had its run. 2017, you had the rise of like all the altcoins, right? Excuse me. And so, altcoins, Ether, XRP, right? They took a lot of the market cap of Bitcoin. Um, so what does that mean though when we started to move here a little bit? If we go back to the daily, it's more pronounced. So we have a nice bounce off the bottom here at 39%, which is extremely low. I mean, it's all-time low, right? So altcoins are going to die, potentially. They're going to do bad. Oh, we got a long entry on a MACD crossover. I'm not quite sure how to use this indicator, but it just points out that there's a MACD crossover. Here it gave you a bad sign. It doesn't really matter I mean, these are indicators, right? Bitcoin dominance. I mean, you can buy the DXY, but um, so usually in bear markets, Bitcoin does regain some dominance because the altcoins just get hit so hard, right? Um, so let's track it. Let's see what happens. Let's go to the 4 hour. What's happening on the slow term? Okay, so yikes. So where'd we lose ground at? 43,000. So 43,000 is going to be a nice hurdle to get over if we do make a run back up. And you saw we did that here, where we ran back to the 200-day, but it respected this high, 51,768. Completely oversold territory. MACD crossovers coming. This is on the 4 hour, so it's not as not as trustworthy. let's zoom out here. Let's clean this up a little bit. So these this red and green and blue thing is the Fibonacci retrace. So Fibonacci retrace, I'll just delete it and then I'll make it again. So the Fibonacci retrace let's put on the weekly, it's cleaner. The Fibonacci retrace, you start it, you pull it basically where the beginning of the run takes place, and then you pull it up to the top. It doesn't matter if you go this way or that way, it just looks cool. You bring it to the top, and these give you your zones of Fibonacci retracement. So from the top, this is and it gives you a price in there, a 23% drop, right? 38% drop, a 50% drop. Am I making this up? No. Yeah, what's half of 68? 34. Okay, I guess it's not exactly though. Anyways, a zone of where it really looks, it tends to respect is the 0.618 area. And the 0.618 area is between there, 0.618, and between 0.5. This is called the golden pocket. So in the golden pocket, things tend to bounce. So if you look here, I mean, we basically bounced off the 0.618. And now you can do this, you can draw these any way you want. I believe that you should draw it from the beginning of the entire run because we're in a bull we were in a bull run, so why not start it where we took off? But I mean, you can do it from here inside the run. So where we took off in July was 30,000, and what we got stopped here at 53,000, and then you can't really see this, can you? And you can see that it did respect 0.618 right here. Let's put it this way, right? So this didn't happen, right? If we consider this to had not happened yet, right? 0.618 was a decent place to put your bid in to ride the next wave. So let's draw another one. Let's draw a fib retracement. It should be interesting. So took off there to the top, and the 0.618 acted as resistance here. So had I been any more intelligent, we should have seen this as a bearish sign to say that's the end. But some of us did, some of us didn't. Anyways, also we talk about the 20-week moving average. 20-week moving average is below. It's acting as resistance for price here on the weekly. So let's just wait. I mean, even I was up here. Where was I at this week? Yeah, 42. That was disheartening. I even was scared to short it, I think at 40. And then you got more, squeeze more out of that if you Shorted again, but who knows, right? So, anyways, I think what we got to watch is what happens with the S&P. 4,400 is our number. 4,400 is our number. We're on the daily here. You know, we had a nasty candle to go below the 200-day moving average. So, best case scenario is this is a beautiful green candle to start Monday and Tuesday. But let's wait.